What's up, guys? Stas here. Welcome back to another video. So listen up. We have 5 companies to break down today, 4 of which already reported earnings, and the last one that we're going to cover, they're set to report earnings after the bell today. So we have a lot to cover today, guys. EPS estimates, revenue, guidance, what the companies reported, charts, all that good stuff. So hit the like button, feel free to subscribe, and you might as well get up to 15 stocks from Moomoo, each up to $2,000, guys. The clock's ticking. Use that link down below. We'll talk more about that later, guys. Don't worry. And with that being said, cheers. Let's dive right into the video. So check it out. It's about 11:30 a.m. right now on the East Coast. And by the way, all the indexes, they're not looking so good right now, guys. We have the Russell collapsing down the most by far, down 1.7%. The Nasdaq's down 0.2, the S&P's down 0.3, and we have the Dow down about 0.2, 0.3%, as well as the VIX is up over 5%, and we do have the metals here down a bit after a pretty good day yesterday. You guys probably remember we had a nice move in silver, and I believe gold was up a little bit at one point. Either way, they're both down today as well. So yeah, not looking so good when it comes to the indexes, the metals. Again, volatility's up, and there's not many stocks on my watch list, at least, that are green right now. We have a couple big tech names, which I'm actually invested in a lot of these. Google, we have Apple, we have Amazon. They're all up. Microsoft as well. What the heck's going on, guys? Looks like Google's up 2.3%, Microsoft's up 3%, Apple's up 1.3%, Amazon's up 1.3%. So if these were in the red, I mean, geez, today would be a bloodbath. It looks like those are holding up the markets. But what's dragging down the market? That's the better question. I mean, geez, if we're seeing a red day with all those stocks in the green, that begs the question, what's dragging down the market? We might have to do some digging there. What sector is down a lot today? I mean, I don't really know. Maybe I'll do some digging and make another video later on today. But either way, guys, we're down across the board right now. And this is after SPY hit an all-time high. You guys probably remember that was in the pre-market. Actually, wait, yeah, in the pre-market today, we hit another all-time high. But we also hit one yesterday, I believe, or a couple of days ago. Either way, guys, we're pretty much at all-time highs. For Pete's sake, we just hit another one just a couple of hours ago on SPY. Triple Q probably did the same thing, or it's pretty close. Actually, no, this one's not quite yet at all-time highs. We hit an all-time high a couple of days ago. Yeah, it looks like we hit 448. That was on the 8th, so about a week ago we hit that. But now we're at 439. We're about $8-9 off of that high, and obviously we're still in an uptrend. So we're seeing a little bit of selling right now. All right, whoop-de-doo, and the indexes, not a big deal at all. The Russell, again, is taking the biggest haircut, down 1.7%, and even the Russell is at the 50 SMA here on the 4-hour chart, still clearly holding an uptrend. So let me run through some of these companies, guys, that reported numbers. We'll start off here with DLTR. Cheers, by the way. Let me take a sip of this coffee. Hit that like button if you haven't yet, and make sure to subscribe. By the way, I think 50% of you guys watch the content, but you're not subscribed. So if that's you, make sure to subscribe. Again, cheers. I appreciate you all for tuning in. And man, talk about a collapse in Dollar Tree stock. This thing is down over 2% on the day today, but yeah, I'm not sure if you saw it yesterday. This thing was down even more. It was at $150 2 days ago. Yesterday, it got down to $126. That was a drop of 15%, and now again, we're down 2%. So we're building on the losses from yesterday. So Dollar Tree reported yesterday morning. And this company, guys, yeah, not looking so great. Let's pull these numbers up. So it looks like they did adjusted EPS of $2.55, which missed the $2.65 expected. And you guessed it, they also missed on sales. $8.63 billion versus $8.67 billion expected. So double miss for Dollar Tree. And now they see full year sales for 24 of 31 to 32 billion. And let's see, identifies about 600 Family Dollar stores for closure in first half. Oh, wow. Interesting. Let's see. Dollar Tree identifies about 370 additional stores for closure as leases expire. $1.07 billion Q4 goodwill impairment charge, $950 million trade name intangible asset impairment charge, yada, yada, yada. But yeah, the fact that they missed EPS, revenue, and their guidance, it looks like their net sales guidance for full year 24 is actually a little bit above the estimate, which is good. If that was not the case, the stock would probably be down even more. But yeah, it looks like their EPS is good as well. Their guidance looks like 670 to 730 versus the 596 expected for full year 24. So not bad for Dollar Tree, guys. Maybe the stock was just way too hot heading into earnings. I mean, look, we did rally a good 50% from $100 to 150 heading into earnings, and I guess the earnings were just not good enough to get us through the highs from the summer where we hit 155 back in July, August, right? Those earnings that we just got were just not enough, and it kind of makes sense. They missed EPS, revenue, but the guidance is there. The guidance is strong. It's looking good. And that's really, again, the only thing that's probably holding them up in the short term from falling down even more. If their guidance was lackluster on top of double missing, man, that'd be ugly for the stock. But that's not the case here. I mean, it's still down 20%. But again, it'd be worse. So that's DLTR. ZIM. Do you guys remember Zim Integrated Shipping? Yeah, we covered this stock a while ago, and I was, flashing the warning signs when it was in the 50s, 60s, 70s, 80s, 90s. I was telling you guys, it's a yield trap. Be careful. The dividend yield was ridiculous. The dividends they were paying at that time were just unbelievable. And now I'm assuming they've, obviously they've cut the dividend. But yeah, their earnings are going negative. The dividend's getting slashed. I'm not sure how much it's gone down. But yeah, the stock's gone down massively. I'm not sure how much the dividend's gone down. But was I not warning you guys about this? I mean, come on. Sometimes it takes a while for things to play out. But a lot of you were telling me, Stas, ZIM shipping, integrated shipping, ZIM during this big run up here. And now we're down big time, about a year and a half. Well, it's actually been longer than that. I mean, geez, when was that? Back in 2021 when you guys were, when I was, making content about this, because I was getting so many requests, asking me to, cover my opinion on it. And I told you guys my opinion on it. And here we are. Yeah, that was back in 2021. Zim just reported and their stock's down even more, man. And look, in just the past couple of weeks, it's down from $15 to now $9. This is a disaster. So they lost $1.23, which beat the loss of $1.29 expected. Sales missed 1.21 billion versus 1.28 billion. So that is not looking so great. What's their guidance looking like? And I just realized their earnings are negative, so they don't even pay a dividend anymore. I just realized that. Yeah, their earnings are negative, so they don't pay a dividend, which is insane. This company was paying a ridiculous dividend at one point, guys, and it's crazy how fast things can go away. So not looking so good for Zim. I'm not touching it with a 10-foot pole. Just figured I'd cover it just because the company reported earnings. So that's ZIM. We also had DG, Dollar General. They reported earnings. And this stock's been doing pretty well. You guys probably have seen my coverage on it on these charts. We broke them down recently. We talked about how obviously DG has been doing pretty well out of that $100 hole it got itself in. It hit $100. Now we're pushing the mid hundreds. And the company reported numbers. The stock got to about 170. So we broke into this range right here that we talked about between 150 to 170, 75, which is good news for the bulls. And we're still in that window now, even though the stock's down about 5.5% when I'm making this video. So let me see what the company ended up reporting. It looks like they did $1.83 in EPS, which beat the $1.76 expected. And sales beat as well, $9.85 billion versus $9.78 billion expected. So double beat for Dollar General. Looks like they see full year 24 EPS of 680 to 755. Looks like they see full year 24 sales up 6-7%. And let's see, net sales growth of 6 to 6.7%. Okay, we just said that. They plan about 800 new store openings, 1,500 remodels, 85 store relocations. Holy crap, 800 new store openings? Jeez Louise, guys, 1,500 remodels. So, yeah, they're doing some massive, of course, remodeling. They're opening new stores, expanding, which is good, and they're only closing or relocating 85. I wonder how many they're closing, how many stores they're closing. Got to dive deeper into the earnings release for that. But yeah, DG, they reported stocks down from 170 to 150. This, honestly, I'm not telling you to do anything. This is not financial advice, but I'm actually looking at this as a decent dip opportunity, right? If we hold 140 to 145, maybe start rallying back into this range that I told you guys about, we could be going towards 170, 75 like that, in my opinion. So DKS, Dick's Sporting Goods, is another one that is rocketing right now. Oh my goodness, 13% in the green. What is going on here, guys? So DKS, they reported 385 adjusted EPS, which beat the 335 expected. Sales 387 or 3.87 billion rather versus 3.79. So they beat EPS, beat revenue. Looks like they see 24 EPS of 12.85 to 13.25. Q4 comparable store sales rose 2.8%. That's great. They raised their quarterly dividend to $1.10 from $1. Awesome. Right around a 10%. Yeah, 10% increase. Great. Looks like they see 24 comparable store sales up 1 to 2%. Let's see, 24 sales, they see 13 to 13.1 billion versus the 12.9 billion expected. Beautiful, awesome. So yeah, DKS, guys, is completely rocketing now. Up 13%. So I'm not going to FOMO into this thing. Obviously, it's pretty overbought in the short term, but if we get a pullback, might be worth watching. So keep your eyes on that. And last but not least, Adobe. Adobe set to report after the bell today, so we don't obviously have their numbers yet for this video, but this one's up a little bit, barely, pretty much at break even heading into the report, but we can see on the 5-day, we have been trending up heading into the report. We're actually up a lot, 35 bucks per share pretty much, or about 5 to 6%. Heading into earnings. So this is interesting. We're going to see how this plays out. Obviously, Adobe is still holding an uptrend. We're still in this channel. I'm looking to see if we can break out of 585, ultimately start making a move back to the low mid 600s. That'd be obviously ideal for the bulls on these charts. If I extend this to the right, you guys can see what I'm talking about. Maybe we could be going into this window right here. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Feel free to subscribe and get your free stocks for Moomoo, up to 15 stocks, each up to $2,000, guys. Just use that link down below or go to stocksurfs.com/Moomoo. I also have a QR code right here. Once you open up your account and fund it with at least $100, you get 5 stocks, and fund your account with at least $1,000, you get 10 more stocks, totaling 15 stocks, and each of those could be valued up to $2,000, and you get a bunch of other perks by using that link down below. So do that, and of course that does help out the channel. I appreciate you guys as always, and with that being said, cheers. I'll catch you all in the next video.